Let's get talking about earnings then. Nischal Maheshwari of Edelweiss Securities joins in with his point of view. Hi Nischal, good to see you in Infosys. What did you make of all the qualitative statements from the management, and how cautious would you be going forward?
I think for the current quarter, definitely there is some amount of disappointment, but I think the volume increase which they have shown, especially on the US front and the domestic, I think that's pretty encouraging. Again, on the European front also, if you look at it, if you take out the 15 million cut which they have taken, I think there also you would see on a quarter-on-quarter volume increases. So overall, around 2.8% volume increase was pretty good. So I think that is pretty good. A bit surprised that there has been a pricing decline, and that is still we have not been able to get an answer to that, because that is clearly shows that there is some amount of pressure. Otherwise, I think there was much more expectations as far as a buyback was concerned in the market, and I think that has disappointed the market quite a bit. And we have seen stock down by around 9-10%, whatever it is right now.
Well, the buyback suggestion was actually, summarily shot down by Bala. He clearly said that was not on the radar at all, and bulk of the cash. He said they may think of special dividends if they have excess cash, but buyback is not on the radar at all. So, Nischal, there was no two ways about that. And he did speak of using the cash for inorganic growth, for acquisitions. Okay, let's get to your other earnings expectations. Okay, just a minute. Sale divestment postponed by the CCEA. That's not something which the market was in any case anticipating with much joy.
Actually,
in a market like this, you won't expect them to perhaps.
Yeah, the CCA was expected to consider the 10% divestment in today's trade. So, I mean, today, for today. So the CCA, we understand, has deferred the sale divestment, like you said, possible market conditions.
No, you could still consider it in principle as positive, and then wait for market conditions to improve to go ahead with the divestment. The fact that they have not considered the divestment perhaps is going to be a negative as far as fiscal deficit is concerned. They have a divestment target to reach, and therefore that point also needs to be noted. It's not something that the markets will take very happily, because every little bit counts in terms of curbing the fiscal deficit. Okay, Nischal, the IIP number revised lower for April, coming in okay for May itself. All told, does it change your growth or revenue numbers, your EPS expectations for the current quarter at all, or it is just one of those numbers that you can at the moment ignore?
Yeah, I think it is just one of the numbers basically at the moment which you are just looking at it. It doesn't change anything for the current quarter, obviously. Even if there is some policy changes which get announced post the presidential election, as you know, the transmission will take at least 2 to 3 quarters to manifest itself into the numbers. So definitely we are not seeing any changes as far as the outlook on the numbers is concerned. But what is interesting, Lata, is that, and I put it on my strategy also, that I had gone back and looked into the last 2 recessions in the last 10 years. And what comes out interestingly is, as the corporates start realizing that the economy is not growing at the same pace what they had anticipated. In this case, maybe most of the corporates were looking at around 8 to 9% kind of a GDP growth, and here we are between 6 to 7. They start cutting down their expenses. So they are just readjusting to your OPEX now. So they will cut down their employee cost, cut down the benches, SG&A expenses, as we have seen for the last 2-3 quarters. Advertisement expenses have been down. This year, surprisingly, the depreciation has been pretty down actually, if you look at BSE 100. And what you see in this kind of a scenario, though your top line will be falling, but your bottom line starts to plateau out or start improving in a couple of quarters time basically.
Okay, so how are you? This
actually creates a bottom for the market actually as far as the earnings are concerned.
That was what I was coming to. Since in your strategy report there are a lot of even improving to overweight, what are you working with in terms of an earnings growth? Do you have a quarterly number? What is your yearly number in terms of an earnings growth? And which quarter do you see things bottoming out as far as earnings is concerned, bottom line?
I think if you really look at in the last 2-3 quarters, though my top line has been degrowing from on a year-on-year basis from 27% to last quarter of 18%. And this quarter, I believe, again, it's going to go down to anywhere between 15 to 16%. Now, this kind of a scenario, my bottom line has now been flat. PBT is what I'm talking about, at around 14.8, 14.9. It's been flat for the last 3 quarters. So I think that is already started getting manifested, where people have started cutting down their expenses. Now, what will happen is basically as you adjust more and interest rate also starts playing out, along with the cost of commodities also playing out, because as you may know, because the cost of, though the commodities have been down internationally, but because of a depreciated rupee, their impact is not showing in the P&Ls of the companies.
Nischal,
So,
sure.
Yeah. So if these two things also play out, I believe you will start seeing improvement in profitability on a PBT margin. You will start seeing maybe in the next 2 quarters itself.
Okay, Nischal, for this earnings season in particular, any sort of surprise broader market picks that you have in terms of possible upside in earnings and maybe consequently negative surprises as well?
I think surprises are not many actually, because the expectations are very low in the market. On the upside, maybe a few banks may surprise you, especially on the private side. Disappointments will once again come on the PSU bank side. I think market is not really looking, not really factoring in that the problem on the asset quality is now gone down to the SME level, and I've been speaking to a lot of banks, and I think this time the numbers, what people are anticipating on the restructured book as well as the NPL numbers will be much higher. I think State Bank after last quarter's guidance has anyway increased that guidance on the NPL level. So I think on the PSU side negatively, on the private side I think still the numbers will be okay. Surprises not many that I see in the current quarter results.
Okay. You have overweight on several sectors. Can you drill them down to stocks? Which are the stocks do you think by your own calculation will start showing an improved PBT growth? Therefore, what would you start tanking up right away?
Actually, several of my sectors are also valuation plays actually, like something like a Bharti is what I, so we are overweight on telecom here, and I believe that Bharti would be the last man standing, whatever the outcome of the telecom spectrum pricing be. So that's why we prefer some sort of telecom overweight and a Bharti there. Now, in case of energy where we are overweight, we are largely banking on that the oil prices have come down, and partially the price increase has been put through as far as petrol is concerned. We are hopeful that post the presidential election some increase is going to happen in diesel also, and that's why we are overweight on BPCL out there, and we like BPCL very much because the other thing is the upstream discoveries which they have done, and recently I think today they announced that in Brazil also they have made a discovery. So BPCL is what we like as far as the oil and gas is concerned. Again on the downside we are on the upside, again on the real estate side I want to play the interest rate, and I'm positive on DLF.
Okay. As well, autos, I understand you're retaining an overweight.
Yes, autos also we are retaining an overweight, and my thinking is like that. In case of autos is one is the valuation is in our favor. We expect interest rates which we were disappointed last policy that we believe the interest rate should be aggressively cut in the economy. So expectation of an interest rate cut, the evaluation is in your favor, and third thing is the commodity cycle is still not played out as yet. So as the rupee stabilizes around 53, 54, I think that play also will start giving positive results to the autos.
All
so
right,
that's why we are favoring autos.
All right, Nischal, thank you very much for joining in with your perspective. So that's the word coming in on the markets. 52.44 currently for the Nifty. We're doing okay.